U.S. President Donald Trump recently utilized dramatic language to describe Argentina's economic predicament, asserting the nation is dying and fighting for its life. These statements were delivered as context for an unprecedented U.S. financial intervention, reportedly encompassing up to a $40 billion package. This support includes a currency swap facility and efforts to marshal private investment, aimed at stabilizing the highly volatile Argentine Peso and shoring up the country's dwindling dollar reserves. The core of the issue is the political and ideological alliance between Trump and Argentine President Javier Milei. Milei, a libertarian, is attempting to implement radical austerity and shock therapy reforms to combat chronic inflation and economic stagnation. However, these policies, combined with legislative challenges and market jitters, have left the country in a state of acute financial illiquidity, triggering the U.S.'s direct and highly visible support just before critical Argentine midterm elections. Analysis of reasons and consequences. Reasons for the intervention. The U.S. administration's decision to offer such direct and substantial aid, moving beyond traditional International Monetary Fund (IMF) channels, appears to be driven by a mix of political, ideological, and geopolitical factors. 1. Ideological solidarity and political support. Trump views Milei as an ideological ally who shares his "make country great again" populist right philosophy. The timing of the bailout, coinciding with the Argentine midterm elections, strongly suggests a direct effort to politically prop up Milei's government and ensure his party can gain the legislative strength necessary to pass his reform agenda. 2. Geopolitical strategy. The intervention is a clear move to counter China's significant financial influence in South America. Argentina holds an ongoing, substantial currency swap line with Beijing. By offering a larger, U.S.-led financial lifeline, the U.S. seeks to reduce Argentina's dependence on China and potentially secure assurances regarding strategic assets, such as ports and military observation facilities. 3. Domestic economic rationale. Beef. Trump also linked the aid to a specific transactional benefit for U.S. consumers, suggesting the U.S. could purchase more Argentine beef to increase supply and drive down soaring domestic food prices. This attempt to link foreign aid to an America First consumer benefit attempts to mitigate domestic criticism. Consequences. The consequences of this dramatic move are significant, both domestically and internationally. 4. Erosion of America First credibility. Critics, including U.S. farmers and lawmakers, argue that pledging billions to a foreign government while facing domestic political and economic pressures, like a potential government shutdown, directly contradicts the isolationist America First policy. 5. Market and political volatility. While the initial announcement provided a temporary rally in Argentine assets, the markets remain skeptical, demanding concrete terms for the aid. If Milei's party fails to win the midterms, the U.S. support could become tenuous, leading to even greater currency and bond market routes. Number 6. Heightened geopolitical tensions. The U.S. action places pressure on Argentina's relationship with China, its largest beef importer and second-largest trade partner. Any perceived alignment against Beijing due to the bailout could destabilize regional trade balances. Prediction and solutions. Prediction. The immediate future of the Argentine economy is highly reliant on the upcoming midterm election results. If Milei secures a strong mandate, the U.S. bailout is likely to proceed rapidly, lending short-term stability to the peso and allowing Milei a brief political window to push through privatization and deregulation measures. If Milei suffers significant losses, the U.S. support, which Trump indicated is somewhat subject to the election outcome, could be scaled back or withdrawn. This would severely undermine Milei, potentially triggering another major economic and political crisis in Argentina, including the risk of default. Potential solutions. Sustainable recovery for Argentina requires structural changes that go beyond a one-time foreign bailout. 7. Broad legislative consensus. For Milei's reforms to work, he needs to secure a stable, broad-based legislative consensus to ensure his austerity measures survive political changes. The reliance on a single foreign patron, Trump, is too vulnerable to geopolitical shifts. 8. Diversification of debt and trade. Argentina must work to diversify its trade and debt profiles, reducing over-reliance on any single creditor or trading partner, whether it be the U.S., China, or the IMF. 9. Targeted social safety nets. The shock therapy measures, while intended to fix the macroeconomy, have led to a plunge in real wages and significant social hardship. A successful strategy must include robust, targeted social safety nets to protect the most vulnerable populations from complete collapse, thereby maintaining social and political stability necessary for long-term reform. 10. Domestic resource mobilization. Instead of solely relying on foreign debt, Argentina should implement policies such as taxing commodity export windfalls to create a sovereign wealth fund, allowing the country to self-finance its stability during volatile commodity cycles. The U.S. bailout, driven by political expediency and ideological alignment, serves as a crucial, albeit temporary, political prop for President Milei. However, without a fundamental shift towards sustainable, domestically driven economic policy and political stability, the dire description of Argentina as dying risks remaining tragically accurate.